I think one of the best tools available to particularly first-time homebuyers in the United States is the FHA loan. This FHA loan allows you to buy up to a 4-unit building with just 3.5% down. So somebody that has never bought real estate before, you might not really know what that means, but essentially when you're buying a property that can generate revenue, like income from other apartments, usually the lender is making you put more money down, like 10% or 20%. And a lot of times people are like, hey, I'd like to buy a property that would generate money like that coming in each month, but I don't have that kind of a down payment to put down. So if you find yourself in a category where you've never bought a home before and you're okay with having other people pay you rent each month, like give you checks in the mail, which is pretty cool, then you may want to consider buying a multifamily property with an FHA loan and just 3.5% down. And here are some reasons why you might want to consider doing that. First is diversification of income. If you're working in a W-2 job right now, you get a check each week from your employer. That's great. But generally speaking, there aren't additional checks coming in the mail for you. One of the cool things about buying a multifamily property and being a landlord, which by the way is not all this scary nonsense that a lot of people make it out to be, you can then create for yourself additional streams of income by people paying you rent. One, for instance, is a duplex. When I was 20 years old, I bought my first ever property, and what it was a duplex, or so I thought. Come to find out, it actually wasn't permitted that way, and I had to go through a whole process to make it so. But once that was approved by the local municipality, I was able to then take the income from the apartment that I rented out and use it to pay the mortgage. So you might be thinking, geez, I don't make enough money to qualify for a loan right now, but if you look at multifamily properties, you can utilize some of that income that comes in from the apartments that are being rented out to help support and pay the mortgage on the building, which might allow you to move out from being a renter where you're paying somebody else's rent payments into your own building, into an apartment that you own, and then have some other apartments in the building, whether it's an additional 1, 2, or maybe even 3 more apartments that then are sending you checks in the mail each month so that you can offset your expenses. Now, you might be hearing this and saying, like, I have no idea how to be a landlord. What happens if the roof goes bad? What happens if the furnace blows up? I mean, there are people that can fix all of these things. And the good news is, when you have more money coming in from the rentals that people are paying you each month, those monies can be set aside in an account and be used for when some of these things come up, as opposed to having to use like a credit card for an emergency or some other form of payment when you don't have the money. Now you have additional money coming in each month from the rental. So all of this is to say that if you've been looking at trying to move out from being a renter to owning, and you've only been looking at single family homes, and you're looking at what the current rates are and what's available for homes, and you're coming up short, you may want to ask your lender or the realtor that you're working with, hey, what would it be like if I bought a multifamily property? Can I qualify to do that? And if I can, what are my options available out there to buy, which could help with generating additional streams of revenue? There's a great book that I read when I was 19 years old that I recommend to everybody. It's called Rich Dad, Poor Dad by Robert Kiyosaki. And the general premise of the book is to try to find opportunities to create additional streams of income. And the easiest way to do that in the United States is with residential rental property, essentially becoming a landlord. It's not this boogeyman thing that many people have had horror stories that like to point out, like, oh, it's terrible to be a landlord because they're going to wreck your properties. I mean, that hasn't been my experience, and I've rented dozens of properties to people over a decade of time and have had very little issues. A lot of times it comes down to just staying on top of things when they come up and being responsive and communicating well with your tenants. So at Pouliot Real Estate, we understand the investing and buying in the multifamily space. And if this is something that you haven't looked at yet, we would love to help walk you through that process and see if it's the right fit for you. But one thing to consider in this market is looking at ways to diversify your income. And the easiest way to do that is to buy a multifamily property and start collecting checks the month after you become an owner in the mail every day, every month, so that you can help pay your bills with other people that are needing a place to live.